You're in the Business Insurance Zone with me, Steve Savant, national insurance columnist and financial color commentator. And today and all this week on The Biz, it's September, Life Insurance Awareness Month. Today, the earning power over a lifetime with #1 author and industry speaker, Tom Hegna.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. I'm your host, Steve Savant, and we're broadcasting live to a nationwide audience of financial professionals right here in Fountain Hills, Arizona, home of America's largest fountain. And with me, day 3, authors of Paychecks and Play Checks, Tommy Hegna. Hey, welcome to our show, Tommy.
Thanks, Steve.
If you haven't read this book, again, if you write me a case and you say in the remarks, Steve, this is my first case with Brokers Alliance, I'll go ahead and send you this absolutely free, give you all our links to Tommy's videos that he's done with us, and we'll send you the link out to his so you can see some of the stuff on his site. I think you're going to find it informative. Here's a major producer that's really sat down and knocked out and easy to understand. By the way, that's a big thing I like, easy to understand. And today, this kind of fits into our power of earning because, Tommy, we're talking, I usually think about life insurance as I try to think how the consumer thinks about it. So when I'm the consumer, this is how I think. Okay, I have my mortgage, I have my debts, and I also have some dreams for my kids, so I'm gonna have to think about education. I have daughters, might have to pay for a big wedding here and there, right? But I never, ever consider, hardly ever, as a consumer, the issue of my earning power over a lifetime. Introduce us to this, because I think this is kind of new to our producers as well.
So here's the deal. Morningstar and Ibbotson have done a lot of work around this, and some major companies like New York Life have done some as well, and it really revolves around the subject of human capital. See, most advisors only talk to people about their financial capital, how much money you have, and we can transfer that, we can invest it for you. They often fail to talk about human capital. And human capital in its simplest terms is the present value of all your future earnings. So if you think about it, a young person, take Michael over there for example, he might not have millions and millions of dollars in the bank, but he's a multi-millionaire in human capital. Because if you did the present value of all his future earnings, it's millions.
Well, I'm blown away, and of course he's referring to Michael, our tech guy that's behind the camera doing all our editing shows. First time I think he made it to the show. Way to go, Tommy. Love you for that. When you think about his lifespan, think about it. Male, non-smoker preferred, early 20s, and they're saying that these kids are going to live into their early 70s. That's 50 years of work and earning power. Now, Tom, I'm sorry, but that timeline blows my mind.
Yeah, and the important thing there is the younger you are, the more you really need to protect your future earnings, because what happens is, as you're young, you don't have much financial capital, but your human capital can be your human capital can be huge. And then over time, your human capital goes down, and what you're supposed to do is build up your financial capital. So it kind of looks like this. You kind of go like this, and then when you're older, like you, Steve, you're loaded with financial capital, but your human capital is down because you don't have that many more years to work, although you said you might even work longer. So
hey, I don't know. Until they kick me off the air, I guess I got to be there. But you're right. When I think about it, most young people say, I'll get to it when I get to it. I'll see you at 30-something. But really, 10 years, your front end. I just looked at this. Think about what I'm about to say. I looked at a female, 25, non-smoker preferred, super preferred, $100,000 in coverage. I'm not talking big money. I'm just saying $100,000. The actual annual premium of $72 was greater than the actual policy fee for the whole year. We're talking, we may have to elevate basic thresholds of death benefit from 100 grand, maybe to minimum to 150 for young people, especially females that's super preferred, because the mortality is nothing. So that means they can buy a tremendous amount of money, coverage, for such a little.
Honestly, I would not be, if I was a producer, I would not be writing much under $1 million a term. Because you can get so much term, and $1 million sounds like a lot, but like we talked in a previous issue, that's only $50,000 a year of income. How many people can really live on $50,000 of income? And so $1 million term policy would be the smallest that I would ever want to write, because I don't know that people would ever need less than $1 million a term. It'd be hard for me to justify that.
Tom, and you're thinking, if you're going to go down this road of earning power, human capital, if I put on, let's say I was willing to say, okay, 50 years, I'm exacerbating the 21-year-old to the 71-year-old, 50 years of earned income. And I know out of that, I also am going to have benefits that are going to be given to me. And I also know sometime I'm going to have a raise. And sometimes I need to accommodate inflation. I mean, are our carriers ready, I guess, to take on the new math for financial suitability? Because now we're talking about living long, not so much the death benefit, but to protect my earning power. Yeah. Do you think they're ready for this?
Well, I don't know, and I think we talked a little bit about the math in a previous show that in a 1% interest rate environment, you need $5 million to protect $50,000 of income, and so that's one piece of the math. You talk about the people living longer, that's another piece of the math, and. I just think this low interest rate environment is having an impact where people don't even see it. And so I think amounts of life insurance are going to have to go up. But what's interesting about that, we're reading all these statistics where people are buying less and less and less, and they're underinsured. And we're going to see tragedies like we've never seen them before. In the next 10 years, you're going to see tragedies. And what I would tell advisors is just don't let those tragedies happen in your book of business. Have them happen in somebody else's book of business. But make sure that you strongly recommend to your clients that they have at least $1 million of life insurance for every $50,000 of income. I think that'd be a great place to start.
Well, when we come back after our break, I want to talk about women who are controlling the purse strings since the World War II vets are already gone, and their daughters who are sitting in the long-term care facility helping them. They kind of control this, and one of the reasons why 73% of the advisors in the United States are fired by these gals is because we never paid attention to them. We never told them they had value. They didn't have human capital. They didn't have earning ability. When we come back after the break, I'm going to get into this whole thing. Hey, we're going a tender gender after the break with Tommy Hegna. We're going to talk about all this. Remember, you can watch our show, all of these episodes, at www.brokersalliance.com. And when you come to our homepage, just hit the on-demand red button, and you can call us toll-free, 1-800-290-7226. And again, the email for our show, thebiz@brokersalliance.com. We'll be back in a moment with Tom Hegna.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Companies in our business are always touting service, products, and underwriting. And we do that too. But here's the difference. Now enter the world of the elite producer with a value package that cuts us out of the pack. A BD that approves social media marketing of non-FINRA products and doesn't take an override. With the best competition desk in the industry, and for our loyal producers, a true group health plan. No one offers that. Brokers Alliance does. Well, welcome back to the Business Insurance Zone. I'm your host, Steve Savant. We're with top of the table speaker, platform speaker, and author, Tom Hegna. Tom, when we're talking about human capital, I think women have become, they've been dissed. Let's just face it. They've been ignored. And now we have complete households predicated on 2 incomes. And we're throwing a little spousal rider on it, which I just don't see that anymore. We have arrived at the place where we're trying to now quantify not only the human capital on the male, but now we're talking about the human capital on the female. And if we think guys are living longer, non-smoker, super preferred, into their 90s, these women are all going to be, listen, I don't know how long Willard Scott's going to be on the air, but he says happy birthday to a handful of Americans who turn 100 every day, right? And I think you're going to see baby boomer gals. I'm not even talking the young girls. I think our baby boomer gals are going to see 100. It's the fastest growing area of the geriatric community, the Centurion Club, as they call it now. Yeah. So talk a little bit about women and how they're they are underinsured. You got some stats for us.
Yeah, women are way underinsured. 43% of all women have no life insurance coverage at all.
How can that be?
More than 60% of women 18 to 24 have no life insurance coverage. Now, you think about it, we just talked about human capital. They are multi-millionaires in human capital because over half the women now are the breadwinners in their homes. So, things have changed, and they've got to have more personal life insurance. I'm going to talk in another segment about that they also need to watch out how much is on the spouse, because 70% of the time they're going to be the beneficiary. But in this segment, let's talk about they're making more money. They have less life insurance than ever. Think about this. when you did write life insurance on people, you said, how much is your 401k worth? And people said, oh, it's worth this. Now it's worth this. How much is your house worth? Oh, it's worth this. Now it's worth this. Oh, how much are your other investments worth? Oh, it's worth this. Now it's worth this. And you just wrote the this to cover that should now be this because of the market going down. So you take the market going down. You take interest rates at low rates. You talk, women are making more money than ever. They're more underinsured than ever. We need to take this issue out to women.
When you think about right now, the purse strings of the greatest transfer of wealth is now controlled by women, World War II and Korean veteran survivors. These gals are now controlling the next transfer of wealth. And on top of that, the people that are helping them walk through that are their daughters in these long-term facilities. And remember, as soon as dad dies, 73% of these gals are firing their registered rep or their advisor. My issue is the gal that's really controlling it is the baby boomer daughter. And if we're not addressing her, not only for her own capital needs, but her kids, it's now time to up our game and walk into a complete new way of marketing to a gender that's been completely ignored.
Well, and not only that, so it's not only the income thing, but think of all the other things that women do at home. Women take a higher percentage of the housework. They still do, even though they earn more. They take care of their parents. If something happens to her, think of everybody that's impacted. Her parents will be impacted. The husband will be impacted. The kids will be impacted. And so, you know, to replace my spouse, for example, and my spouse doesn't make a lot of money, but she does everything else. She does everything. Like, I can't do what I do without her.
You're on the road all the time.
If something happened to her, it would shut down my entire operation. So I've had to get more life insurance on her because she's that valuable to the family and she's the glue that holds everything together. And I don't think she's the only woman that's the glue in that family.
After I saw a husband lose his wife and he had $100,000 on her and it did nothing. I mean, after we took care of the funeral costs, after we went ahead and tried to take care of a house sitter for his young kids for the year, we burned through that money so fast on all these things that we had to do to set up a complete different lifestyle.
Right.
I mean, I couldn't believe it.
Well, think about it. $100,000 at 1% interest is $1,000 a year. Can you replace your spouse for $1,000 a year? No way. At 5% interest rate environment, can you replace your spouse for $5,000 a year? No way. No way. And when you start talking about the transportation, she's transporting kids places, she's taking care of the kids, she's providing the meals, she's doing everything that around the house. There's no way I could replace that for that kind of, so, you know, yes, you got to replace their income and they're making more money, but there's still a lot of women in traditional roles. And what I want to say is the tremendous value that they have and how irreplaceable they are. And you got to protect against that. And that's part of this whole human capital.
Well, we're talking, of course, we have a lot of our carriers that watch our show, and we're looking for maybe a new standard and a reconfiguration and a redefinition of financial suitability. We may have to look at the numbers that he's talking about. Tommy's bringing up a timeline. It's extensive. It's long because of human mortality and life expectancy is just going out over it's just so long now. I wonder if we can come to new math and a whole new way of making this kind of formula work, especially, as you say, in a low interest rate environment. I'll give you the last word.
Yeah, well, you know, let me just throw out one other idea that we didn't get into the last time because we got just a couple minutes. Covering final expenses. You know, there are couples that they haven't done as well in life, and they might have saved up, you know, a little bit of money each for final expenses, but they don't have any more money, but they know that won't cover it. That's another place, life insurance. If they just transferred that money they save for their final expenses into a life insurance policy, you can leverage and give them a lot more coverage of their final expenses. And one last idea is...
but can I ask you one question,
yes.
though? Why do we always wait for final expenses till we're in our 60s?
Yeah.
I never get that.
And then there's health issues that set in, and so if you just reserve a little bit of money when you're younger, it can leverage a lot. And the longer you wait, the more money it takes.
Can you imagine if you just said, I'm doing a paid-up policy at $50,000, $100,000 just for final expense alone? You'd save the kind of heartache that we go through with geriatrics on final expense. I see it all the time. Tomorrow and Friday, we're going to have Tommy on all this week. These are the issues that help open up cases for prospects. Remember, you can watch our show at www.brokersalliance.com. That's been the Buzz on the Biz for today. Get in the zone, the Business Insurance Zone.
The Biz is brought to you by Brokers Alliance, a national leader in insurance products, support services, and educational workshops. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.